Hey there, and welcome to Real Investment News. I'm Mike O'Neill. Right now, the Dow is up about 160 points, the S&P is up 6 points, and the NASDAQ is up about 20. So the markets are continuing their record-setting climb, but there has been a lot of discussion out there about the number of public companies. Take a look at these headlines from last year. CNBC and Bloomberg had the same headline saying, "Where have all the public companies gone?" The Wall Street Journal, "The roster is shrinking before our eyes." And the Journal's Intelligent Investor notes that stock picking is dying because there are no more stocks to pick. So how bad is this? Well, take a look at this chart from the World Bank. I was actually surprised to see the number jump from 1979, 2,400 companies to more than 5,000 in just 1 year. And we had another big climb all the way through the 90s. In 1996, we had more than 8,000. But since then, it has been steadily shrinking. At last count, 4,331. And the reason? Well, often it's because of takeovers and mergers and acquisitions. So why does it all matter? Well, take a look at this. There are more than 5,000 exchange-traded funds, or ETFs, available. And when you have so few public companies, that means that there is a lot of overlap. A lot of these ETFs are holding on to the same companies. It's kind of like those popular mega movie theaters with 18 or 24 screens. Yeah, it's a great place to spend your money and convenient, but often they're just showing the same big budget movies. And that's a lot like these ETFs. They are offering a lot of the same big stocks like McDonald's or Apple or Walmart. And when those big companies start to have problems, the smaller companies who are included in the ETFs get yanked around too, and often they can't endure those swings. And that brings us around to the markets. You know, they're soaring now. We haven't seen a correction in a very long time. Vanguard says it's a 70% certainty that one is coming, and when that happens, we're going to have a problem. It's going to be like shouting fire in a crowded movie theater. A few of these people are going to get out, but with fewer exit choices, a lot are going to become stuck. And the same thing with the ETFs. If a few of the big companies start to drop, so will a wide number of ETFs. A few are going to get out, but even more are going to get stuck, and they could lose a lot of money. Now, Lance Roberts talks about this in his blog post, The Exit Problem. I'm going to have a link in the description post below. It's good reading. You definitely want to check it out. Now, in the meantime, thank you so very much for watching. Please remember to follow us on Facebook, Twitter, YouTube. Check out our past reports on realinvestmentnews.com. I'm Mike O'Neill, and we will see you again in a couple of hours.